Slowly but surely, the promise of crypto and the blockchain is making its way to finance. And this is one of the things that got me really excited about crypto and the blockchain a few years ago, is that this could be a much more efficient way to move money around the world. But it's been really, really hard for the industry to break the traditional ties between banks and in particular the credit card infrastructure. So Visa, MasterCard, Discover, American Express. This is typically how businesses are accepting payments and how money is transferred from customers to merchants. What makes this potentially disruptive is that typically customers and merchants aren't actually directly interacting with those credit card companies. Yes, you're using a credit card, but that credit card is issued by a bank. The payment terminal that you use when you check out somewhere is not a Visa payment terminal. It's maybe a PayPal payment terminal. When that money is transferred to the customer, it's not transferred to a Visa account. That money is not transferred to a Visa account. It's transferred to a bank account. So money is going from a customer's bank account to the merchant's bank account, and basically 3% fees are taken out along the way. That's how the credit card business works. That's how these companies can offer 1.5%, 2%, 3% benefits for just using those credit cards. But the opportunity to disrupt was to use the blockchain to disaggregate all of those pieces that are pulling value out. And the companies that can do that are the companies that are taking the payments and providing banking services to customers. So Block, PayPal, maybe in some cases Coinbase. These are the companies. They could all potentially disrupt the way that credit card companies work today, the high fees that they're able to charge, and the fees that those merchants end up paying as a result. So I'm going to dig you through some of the changes at PayPal, because PayPal is one of the companies that could actually do this in the background. You may not even know that it's happening as a customer. You could be moving money around on the blockchain instead of moving money through the typical credit card ecosystem. It could be much, much more efficient for merchants, much, much more efficient for PayPal, more profitable for PayPal, and more profitable for merchants. So that's what I'm going to dig into today. My name is Travis Holliam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at PayPal's stablecoin that they announced last year. This is from August 2023. PayPal announces a US dollar stablecoin. This is not the first stablecoin out there. You may be familiar with Tether. You may be familiar with USDC token. That is actually launched by Circle in partnership with Coinbase. So they have a relationship there. I'll get to how much money is involved in that business in just a second. But they launched this in 2023. And part of the idea was to be another trusted stablecoin and to be a big revenue source for PayPal. You could send this just like any other asset on the blockchain between compatible wallets, person-to-person payments, fund purchases, and convert any of this from cryptocurrencies to PayPal USD. The big news in the last week was that PayPal is also going to be available on Solana. Solana is the fast, cheap ecosystem. You can make transfers in a matter of seconds, and the cost to make those transfers is a fraction of a penny. So take a credit card transaction, for example. You go out to eat, you spend $100. When you swipe your credit card or pay with your digital wallet, that merchant is going to pay about a 3% fee, maybe a little bit less than that, but about a 3% fee just for the right to accept that transaction. What PayPal could do in the background, if PayPal is the merchant solution, is they could say, instead of running on credit card rails, so instead of running on Visa, we're going to run this on Solana, and we're going to use PayPal coin, or potentially they could use USDC. They could use any sort of stable coin or even cryptocurrency. And it would just go from one wallet to the other wallet with relatively low transaction fees in there. PayPal could make their money by providing those solutions to merchants, and those are typically things that they pay for now. If you look at a company like Block, they make most of their money on subscription solutions, not on actual transfers of money from point A to point B. The companies making money on those transfers is companies like Visa and MasterCard. So they would be more than happy to disaggregate Visa and MasterCard by using a different medium. This could potentially be that medium for monetary transfer. Is this a big business for PayPal today? Because one of the ways that they could make money is just providing these stablecoins and providing interest on the stablecoins. Not right now, not a very big business. This is the market cap, according to Coin Market Cap, about $400 million right now. That compares to the USDC token, which has about $32 billion worth of assets. But the USDC token is a massive business, and the impact on Coinbase can't be overstated. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at Coinbase's stablecoin revenue. You can see that these are trailing 12-month numbers, but in the last 12 months, nearly $700 million in stablecoin revenue. That is a very, very profitable source of revenue. They can offer benefits to customers like interest payments by just holding that asset in their Coinbase accounts. So this is where they're kind of moving into the payment space through kind of a backdoor. But PayPal could do these things with their existing business. They have money in customers' accounts. They have merchant solutions. Now they have the stablecoin. So they could actually make these transfers themselves, make them much more efficient. So this is really where I think there's potential upside for PayPal, and where PayPal could play a central role in disrupting the traditional credit card ecosystem. They have the incentive to do exactly that because companies like Visa have been extracting as much as they possibly can from merchant solutions like PayPal. So now this would be the shoe on the other foot. PayPal could say, hey, merchant, we're going to charge you 3% to make transfers. If you're using Visa, we'll charge you 0.5% if you're making transfers via the blockchain. And like I said, all of this could happen in the background. It doesn't need to happen the way that typical crypto transactions happen today with the complex wallets and all that kind of stuff. That can all be abstracted away through something like Venmo or the PayPal app, because it's just moving money from point A to point B. If that money exists, it could be transferred to a stable coin, and then it could be moved very efficiently. So this is where I think this is really disruptive for PayPal. It will be interesting to see if they start to introduce a lot more of these solutions to merchants to help them lower their fees. If long-term that eventually means more monetary opportunities for PayPal, maybe they can increase their margins on transfers, because the cost, remember, overall is coming down, even though the margin for PayPal themselves potentially would go up. They could also make money on these stablecoins themselves. Coinbase has a pretty big business in stablecoins and generating $700 million a year in revenue. There's nothing to say that PayPal couldn't be even bigger than that if they lead the charge in these cryptocurrency stablecoin transactions. But this is where I think there's potential for a lot of disruption in this space. The blockchain is fundamentally a more efficient way to move money around than the current credit card ecosystem. Now that we're doing a lot of these payments digitally through digital wallets, there's no reason that a digital solution isn't the right solution for payments today. But what do you think about PayPal getting into stablecoins and potentially introducing stablecoins in their merchant solutions? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.